All right, good evening, everybody. It is officially Sunday night. It is November 27th, 2022. Hopefully everybody had a fantastic, very, very long and extended and oftentimes much needed holiday weekend. Hopefully you all had a wonderful Thanksgiving with your family and friends. But now it is back to work. It is back to reality. Very busy week on Wall Street coming up. I will just like to say that. Before we start, I just want to set the stage by giving some context here, okay? So let's quickly, before we talk about the futures, before we take a look at, the S&P, the Dow, and the NASDAQ futures, let's first just quickly review on where we're at right now as it relates to the Fed funds rate, okay? So currently the Fed funds rate, the target is 3 to 3.75 to 4%. Or 3.75 to 4%, okay? So we need to keep that in mind as we move through this live stream because this week will be the first week of December. And the second week of December is when we will be hearing from the Fomc, which is the Federal Open Market Committee, when they will be setting the tone for monetary policy. That is going to be December 13th through the 14th. Now, this week, the reason why I bring that up is because starting off the week on Monday, we are going to hear from not only one, but two Federal Reserve presidents, okay? So on Monday, we are going to hear from St. Louis Fed President James Bullard, okay? And you guys could hear that live tomorrow at noon. If you go to marketwatch.com, if you tune in at noon, you will be able to see the interview of St. Louis Fed President James Bullard. You could watch it live. I would highly recommend it. Okay, that's number one. Now, number two, coming up on Monday, is the New York Fed President John Williams. He will be speaking at the Economic Club of New York, and I think this will serve as a very, very nice proxy to what we may be seeing at the December 13th through 14th meeting. Okay, so this week is slam-packed with housing data, economic data as it relates to inflation. We are also going to be hearing from some very, very notable companies like Salesforce, CrowdStrike, Hewlett-Packard, and much, much more, which we will be talking about throughout the course of the stream. Let's take a quick look at futures, everybody. If you look at the E-mini futures contract, ticker symbol ES for the S&P 500, futures are down actually quite substantially. We are down about 27 points on the S&P. And it's interesting because that correlates very nicely with that 200-day moving average. If we take a look at the NASDAQ 100, ticker symbol NQ, so the NASDAQ futures, we are down about 108 points, or just under 1%, trading at 11,670. And last but not least, let's take a look at the Dow 30, ticker symbol YM. And the Dow is down about 166 points to 34,190. Without further ado, everybody, let's get started. We will be heading uptown tonight. Obviously, since Salesforce is reporting earnings this week, I thought it would be appropriate to head uptown near Bryant Park, check out Salesforce Tower, and also the New York Public Library. So I'll say hello to everybody in the chat. Just let me get downstairs. I think it's gonna rain tonight too on the live stream, so let me grab my umbrella. Hopefully it doesn't rain, we'll see. And I'll say hello to everybody in the chat once we get downstairs. Sparks Carnival says it's still raining. I think it is. We'll see here in a minute. Now, I actually just got in. I had dinner at a really, really good dim sum place. Give me 1 minute. And it wasn't raining too bad when I was down there. So hopefully the rain has subsided. We're at the Wework office here at 135 Madison. Really beautiful. I always love coming to work here. Ollie Star, good to see you. Cynthia Beal says it's drizzling here in Staten Island. Copy that. Yeah, I mean, we'll see. Let me see once we get down here on street level. Hopefully it's not raining too bad. We'll see. doesn't look too bad. Let's see. Ooh, just windy. All right, it's actually kind of warm. All right, team, welcome. Welcome to the stream. Thank you for joining Walks in Wall Street once again. We are reporting live from Manhattan, the corner of East 31st Street in Madison. Let's say hello to all of our viewers. Connie Ruiz is here, time lapse, welcome. Tone Rick says good Sunday evening, Tom in chat. I see Destructionist is here, says happy Sunday. Thank you, Destructionist. Vinny Castellano says hello, Tom. Maria sends her love. Thank you so much, Vinny and Maria Castellano from Staten Island. NJB says howdy. NFT Boy is here, says hello all. British Gray from Tampa, Florida. Welcome, always a pleasure. Robert, let's go ahead and add you as a moderator, my friend. Thank you for helping out. I see Photos from around New York. What's up, Photos? Always love to see you here. I see Dan Zhang says, hey Tom, the Hang Seng just tanked like 4% right after Hong Kong opened. Yeah, I saw that too, and that's probably what's bringing down US futures. Now, to Dan Zhang's point, I really think we got to watch the Chinese markets here very, very closely, because we are seeing very interesting action as it relates to these widespread, or I should say now widespread protests in China due to these zero COVID lockdowns. But we covered that pretty good last night on the stream, so we won't hammer that into your brains too much. But that is something we really have to look at. It's a very good point. Hey, Adrian is here, says hey Tom, good to see you, Adrian. I see Matt M, good to see you, Matt. Dr. Longus, hopefully you had a good holiday weekend, my friend. Hopefully your Thanksgiving was everything you wanted and more. Joseph Hardaway says yo. Beth says hey Tom's, always look forward to your streams. Beth, thank you so much. I look forward to seeing you in the chat as well. Arum Z says hey Tom, how's it going? The Investigator is here, and Julia M, Dashcam, welcome. Solo 401 says the radar looks pretty clear. Thank God, Solo, because when I came into the city today, it was raining like crazy out east on Long Island. It was coming down in buckets, and I really didn't want to stream in the rain tonight. So I'm very happy that it's not downpouring. Dan Zhang says it takes a lot of courage to do that kind of protest in China. The chance of you getting arrested is almost 100%. Yeah, and I think that's what makes it so dire, right? So to Dan's point, protesting on that massive a scale in China is not like doing it in the United States. It's completely different. It serves a different set of ramifications, and I think that's why markets are reacting here. Now, what's going to come about of this, I'm not too sure, but I think this really all started off. Wow, check out the Empire State Building. That's really unique. It almost looks like a cloud is forming right off the top of the Empire. That's a really interesting shot. Well, allegedly this all started when the Foxconn workers, right? And this is why we've been talking about it on the stream, because of Apple and the like. They were actually locking their employees down due to an outbreak of the Big C. And it seems as if it was met with some sort of resistance. Now, there's some really interesting coverage of this on Twitter. I'm not sure if anybody is on Twitter, but some of the ground floor, I should say, more one-off journalism is really good in covering these protests. The protesters were throwing barricades at the police. It's just wild, and I think it's escalating. And I think that's why you're seeing big ripple effects in the Chinese market, and U.S. futures are bleeding off overnight too. We'll see if it can last into the open tomorrow. We'll see. RJ is here. Welcome, RJ. Thanks for being here. Michael Joseph, Mike MTL, sunshine after rain. Happy Sunday to everybody. So we are now on the corner of 34th Street and Madison Avenue. We are actually going to be crossing over to 5th. Maybe we'll take a quick peek at Macy's, but then we will be walking up 5th Avenue tonight. Using People is here, says, hey Tom. Brad's Brain says, Tom, I think the China stuff is also a testament to Musk freeing up Twitter. I think these videos would have been blocked prior. That's actually an interesting point. And you probably are right. You're probably right. Now, the videos, I really want you guys to see the videos for yourself. But I think we just need to keep it in perspective, sort of like what Dan was saying. It's a completely different set of, I would say, seriousness when you have those type of protests in China as opposed when you have them here. If you look all the way in the distance, you'll see the beautiful One Vanderbilt building. But tonight we are going to be walking down 5th as opposed to Madison. I think it'll be a little bit less windy. But as I said, everybody, last week was a pretty big nothing week in the market, right? As it relates to volatility, as it relates to trading volumes, because usually the week of Thanksgiving, trading volumes tend to dry up on exchanges, and especially that Friday after Thanksgiving. Not only is it a half day for the markets, but everybody's pretty much taken off, right? So you're really not going to see much action the week of Thanksgiving. I think we're going to see the action this week in the equity market. And the reason why I say that is because we are going to hear not only from many Fed presidents, and this comes just but a week before the FOMC meeting, but we are going to, let me put my backpack down for 2 seconds. I'm going to put my umbrella away just because I have a massive umbrella, and thank God it's not raining. So hold that thought for 2 seconds. All right, sorry about that. So as I was saying, man, it's wind is picking up though. Next week we are going to hear from not one but 2 Federal Reserve presidents, and this is probably going to act as a potential leading indicator of what monetary policy will be, or the new updates to monetary policy at the next FOMC meeting, which is December 13th through December 14th. Now, not only that, we are also going to be hearing from the Federal Reserve's preferred inflation gauge. That is the PCE, okay? And that is going to happen later in the week. But we're getting all of this economic data and this inflation data ahead 1 week prior to the FOMC meeting. So I think you're going to see increased volatility. I think you're going to see a nice pickup in volume across these exchanges here, because what I'm assuming is going to happen is traders, portfolio managers are going to be watching very, very closely these inflation readings, and also some housing data that's going to be coming out, as well as non-farm payrolls. They're going to be watching all this, and depending on those numbers, right? So depending on the results, they are going to be positioning their portfolios accordingly to front run the FOMC meeting. Now, at the very beginning of the live stream, we sort of did a quick review on where the Fed funds rate is right now, which is 3.75% to 4%. That is the range. Now, if you look at the futures market, as of doing video, there's about an 80% probability, or they're pricing in an 80% probability of a 50 basis point rate hike in 2 weeks at the December 13th, 14th meeting. Now, if we have the PCE coming in hotter than expected, if we have the non-farm payrolls coming in hotter than expected, and let's say if we even have the unemployment rate declining, I think you're going to see a big material change there in the probability or the odds that we get a 50 basis point rate hike, and maybe we get another fifth consecutive 75 basis point rate hike. But assuming those numbers come in maybe a little bit better than expected, inflation isn't running that hot, then who knows, maybe we'll just get that run-of-the-mill 50 basis point rate hike. Touring Places, good to see you, my friend. Hope you're well. I see Dusty Cole is joining us in the chat. Using people says, is the Black-Scholes equation still relevant today, or is it BS? Well, I think you need to sort of understand what it is, right? So Black-Scholes is really how options are priced. So that is really relevant to the derivatives market. And I do think it's relevant, but I don't think you need to be a mathematician or an expert in it. But you definitely need to understand it, especially if you are going to be dabbling in the options market. Now, the reason why I say that is because if you think about what happened during the pandemic, when a lot of retail traders, retail investors were sitting at home, they were speculating on these very high leverage products like options. Now, the problem is, I would say the vast majority of them, especially the ones that are buying and selling options on Robinhood, I would probably bet, now I can't prove this, but I would probably bet with a high degree of certainty that the vast majority of those speculators have no idea how options are priced, right? They probably have a very derelict understanding of the Greeks, and you don't have to be, again, you don't have to be a mathematician, but you need to understand the mechanics of how an options contract is priced based on factors such as volatility, time decay, and the like. So I don't think it's BS. I think it's relevant to understand, but you don't need to be sort of a mathematician. Hey, Ryan Royal is here. What's up, Ryan? Always a pleasure to see you on this very windy but not rainy night in Manhattan. Let me know if you guys could hear the wind in the mic, because we are getting some strong gusts of wind here. I see my friend Dan. Welcome, Dan. Good to see you. Mike C says, my understanding is that more people lose money than make it buying options, and likewise more sellers make money. Yeah, that's true. That is very, very true. So most options, right, expire worthless. Now on this stream, very seldom have we did a deep dive into the options market. Maybe one day I will throw together some content for that. But that is true. So the vast majority of options on the chain will expire worthless. That is correct. Hey, Mike is here. Audra says, yeah, we could see the wind. Or hear the wind. Google says, hey everybody, what's up, Google? Welcome. OI is joining us. Wow, DowJones.eth is joining us, my Twitter friend. Speaking of Twitter, DowJones.eth says it's pouring raining in Boston. Yeah, I think you guys are getting the rain that we had this morning. I mean, the rain that we had this morning was ridiculous. I was walking to the train out on Long Island. It was just nuts. I was absolutely soaking wet. Hey, Rex A says, good evening, Tom. Good to see you. War Walker says it sounds like a tornado. Yeah, maybe I'll buy the microphone tomorrow. We'll see. All right, so just to quickly recap, tonight is the Markets a Look Ahead stream, where we will be going day by day, covering the major events that will be happening on Wall Street, all the way from corporate earnings to big major economic events and activity. So tomorrow we start off November 28th, and I would highly advise many of you to tune in live. We are going to be hearing from not one but two Fed presidents. So tomorrow at noon, so 12 noon Eastern time, if you tune into marketwatch.com, they will be having a live stream where they will be interviewing St. Louis Fed President James Bullard. Okay, and that will be tomorrow at 12 noon. So if you guys want to watch that, which I would highly advise, right? I think it's very important that we listen to what the Federal Reserve presidents are saying before we head into the FOMC meeting in 2 weeks. So after that, we are going to be hearing right here in New York live, we are going to be hearing from John Williams. And John Williams is the New York Federal Reserve president. He will be speaking at the Economic Club of New York. So I think those are two telltale signs, or I think we could use a lot of the verbiage that is going to be said during those two interviews and the one speech. We could use that as a proxy to what may or may not happen at the conclusion of the FOMC meeting in 2 weeks, right? At the conclusion of the FOMC meeting on December 14th through the 15th. And as of right now, if we look at the futures market, roughly an 80% probability that we will get a rate hike, and it will be 50 basis points. We are now outside of Macy's Herald Square. We are looking at the beautiful windows, the holiday windows here. Dan says, in my book, it's all short-term blah blah that we don't need. Market is going 50 to 60% lower from here, says Dan. Wow, Dan, I'm sure you have a massive short position on the market then. You could be right. Hopefully you make a lot of money. Mothman says the New York Knicks suck. I'm not a big basketball guy. Smee Media's here. Good to see you, Smee Media. Hey, Blues Writer, thank you so much for the $25 donation, my friend. Says, hey Tom, sorry I missed your busting through the 25K threshold. Congratulations and Godspeed in 2023. Thank you so much. I appreciate it, Blues Writer. Thank you for the support and for your kind donation. I much appreciate that very much. And hopefully you had a fantastic holiday weekend. Really quick before we start to head uptown, we are going to be making our way towards the Salesforce Tower tonight. And that is because Salesforce will be reporting their quarterly earnings this week, which we'll talk about. But if you look directly in front of you, you will see the beautiful One Vanderbilt building. Yeah, Carnar Bars says the windows are so beautiful. They did a really good job this year with the Macy's windows here. Dan Zhang says, Tom, can you believe Japan lost to Costa Rica after that amazing win against Germany? Dan, I didn't get a chance to see many of the games today. I was so busy, but I'm definitely going to watch all the highlights. But that's a bummer. I really wanted Japan to win. I wanted them to take it as far as possible. Mothman says, one thing I learned by watching your YouTube videos is that every day is a gift. You can see the beauty in everything. Great job, Tom. Thank you so much. Appreciate the kind words. All right, one more look at Macy's from this angle, and then we will head uptown. Dan says, walks from Wall Street. I do not short individual positions, but I do have a medium-sized short on QQQ. Very nice. Well, good luck. Hopefully you make a lot of money on that. Touring different places. This is Salesforce, a marketing company. I think that's one way to describe it, but Salesforce is really the pioneer and the leader in SaaS software as it relates to CRM, right? So CRM tools or customer relationship management software. Chances are, if anybody is in a sales type role within an organization, you've probably used Salesforce to manage a 30, 60, 90-day sales funnel. But the good thing about Salesforce, at least when I used it, I currently don't use it anymore, what you'll find is that a lot of well-established, like Fortune 500, Global 2000, Fortune 50 companies tend to use Salesforce. Like it's 100% market share there for Salesforce. But Salesforce is a premium product. Salesforce is very expensive relative to a startup environment, right? So let's say if you're a salesperson or you're even working at a SaaS startup, chances are those startups will use a CRM, but some of them won't use Salesforce. They'll use Zoho, which is another CRM. Now they're not publicly traded, but they do something very similar to Salesforce. There's a couple other ones. I think HubSpot has a CRM tool as well. Now, I think the biggest advantage that I've seen when using Salesforce is its integration into into all other different types of SaaS sales tools. For example, a company we talk about a lot on this live stream is ZoomInfo. So ZoomInfo, the CEO is Henry Schuck. It trades under the ticker symbol ZI, and it integrates really, really nicely with Salesforce. So for example, let's say if I'm prospecting a specific company, right? I can scrape the data from ZoomInfo. Let's say if I want to contact the director of patient services at a home healthcare agency, ZoomInfo will provide me with the phone number, the email address, and maybe even the physical address of that prospect, which I can integrate with Salesforce and then make notes on, whether I made a call, sent an email, things like that. So yeah, Salesforce is a big leader in CRM, but they do so many other different things. Prince Ice says, good afternoon, welcome. Mary Lamb is here. Mary Lamb says, what is CRM? So CRM is an acronym, and it stands for Customer Relationship Management Software. And it just so happens that is the actual ticker symbol of Salesforce. Hey, Bagels and Walks is here. Good to see you. Edward Adams says, evening all, taking holiday phone calls with the family this evening, cutting into my chat time. Well, hopefully your family's doing well. Everything is going well in your neck of the woods. Dan Zhang says, Salesforce also has some of the best remote working opportunities. Indeed they do. So Mark Benioff, I think he may have been one of the first CEOs to announce I think it was Jack Dorsey first at Twitter, well, when he owned Twitter, or when he was the CEO of Twitter, came out first during the pandemic and announced that you're able to work wherever you want. Then I think it was Mark Benioff at Salesforce saying that they're not going to require their employees to return back to the office. Now, sometimes when I'm walking around Manhattan, I see Salesforce employees walking into the office, but I do have a friend there that is an account executive that sells into financial services companies, and he hasn't been to the office not once since the pandemic. So they don't enforce it. They don't enforce it. If you want to come in, you can, but they definitely don't enforce it. All right, team, so that's what's up for Monday. So just remember those two Fed presidents will be speaking, one of which you could actually watch live, so I would definitely take a look at that. But Tuesday, November 29th, there's another company I wanted to quickly touch on. Now, you all know that I think in the grand scheme of things, I would say over the next 5 to 10 years, a growing or a very, very fast growing market for opportunity, broadly speaking, is cybersecurity in my view. And it's actually kind of unfortunate, right? Because as cybersecurity spend grows, if you sort of plot the occurrences of cyber fraud and cybercrime, it grows right along with corporate cyber spending, as well as public sector cyber spending as well. So 2 weeks ago now, I think we heard from Palo Alto Networks, which I view as the leader in cybersecurity, especially as it relates to zero trust architecture. Now, if you don't know what zero trust architecture is, please revert back to our cybersecurity stream when we did a history of cybersecurity architecture, right? We did a deep dive into traditional castle and moat style cybersecurity, and transitioning all the way through VPNs and now to zero trust. So if you want to know a little bit more about that architecture specifically, please revert back to that stream. But we are also going to be having a very notable cybersecurity company called CrowdStrike. They trade under the ticker symbol CRWD. They are going to report earnings on Tuesday, along with Hewlett-Packard and Intuit. But if I were to say there was 3 cybersecurity companies to watch, and again, when I'm talking about this stuff on the stream, this isn't a recommendation to buy these types of securities, to buy these stocks. It's to watch these emerging trends in the market of cybersecurity, right? So I think this stream helps out in 2 ways. Number one, as a career trajectory, right? If you are maybe a fresh new graduating university or college, or you're trying to make a career change, one of the things that has helped me is by looking at the land grab of a total addressable market, and look at total addressable markets, or look at companies that are selling into a massive TAM. And cybersecurity as an industry has many, many companies within that niche that are growing and that are poised to grow. So we will be doing a deep dive into CrowdStrike's earnings, but if I had to name the top 3 companies that I personally cover, that is number 1, Palo Alto Networks, number 2, Zscaler, ticker symbol ZS, which I think Zscaler may report next week. Does anybody know? I'm blanking on that. Could we get a quick Google search on Zscaler's earnings report? Hold on, let me show you guys this really nice view from this corner here. Take a look at the One Vanderbilt building right across the street from Bryant Park. Looks fantastic tonight. Prince Ice says, I feel the stock market tends to lack interest in cybersecurity businesses, which projects that most people don't know of its importance, says Prince Ice. Interesting thought there. Thomas Conroy says, best neighborhood to live in Manhattan. I'm going to be a little bit biased here. I would definitely say the Upper West Side of Manhattan. Specifically between, I don't know, maybe 72nd Street and 86th Street, I would say. Anthony Cap, welcome, says good evening, Tom, and everybody in the chat. Solo Flyer is here. Dan says CrowdStrike doesn't make any money. Their net income is, yeah, that is very true. Very, very true. So Dan, usually what we do here, right, is first need to develop the macroeconomic framework. And this is, we've been talking about this almost every day on the stream, right? So specific stocks perform well in specific environments. And I think we need to make the distinction when I name a specific company on the stream, that is not an endorsement of you should buy the stock, I think it's going to go up. That is not sort of what we do here. If you think about all of the specific stocks, right, that have performed well in 2020 and 2021, they have performed well because we were in a completely different set of a macroeconomic and monetary environment, right, which would be extreme quantitative easing,
and GDP growth and expansion. So when you have a very accommodative Federal Reserve that is cutting rates, setting rates near zero, and buying US Treasuries, right, buying on the short end of the curve and providing liquidity, money-losing companies and fast revenue growers tend to perform very well. Case in point, like the ARK Innovation ETF sort of stocks, the Cathie Wood stocks tend to perform very well. But once the macroeconomic environment changes and once the monetary policy changes to quantitative tightening from QE, those particular stocks, like the very fast revenue growers, like the CrowdStrikes, all of those very high beta SaaS stocks, those stocks get absolutely walloped and crushed. And so when I want to make the distinction, because I think maybe some newer people here, when I mention a specific company, it is not, don't take it as an endorsement. Take it as, I think there's an interesting emerging trend, either in, cybersecurity, we talk about healthcare, and I think these companies would serve well for either a career opportunity or something like that. But we can't advise on investment here. We are not licensed to do that. Hey, FredX is here. This is Zscaler report, 12/1 after the close. Oh, so Zscaler is reporting this week. That's crazy. Teresa Ma is here. Good to see you. Sparks Carnival says Okta uses cloud identity verification security platform. I think there's big potential. Yeah, the IAM space is very difficult. It's a very saturated market, right? The IAM space. Now, there's another company that competes with Okta, Ping Identity, which was actually now taken private, I think, by Thoma Bravo, so Thomas Bravo's private equity firm. And there's many other private companies that also deal in the IAM space. I think another one is Scale Fusion. But yeah. Tariq, cybersecurity companies are well and okay until they are hacked or data is leaked. This is why the market doesn't appreciate cybersecurity. It has seen too many hacks and stocks dive. That's a good point. That's a good point, Tariq. MIWA says, Tom, did you see this YouTube interview? Bitcoin will collapse after Fed meeting, Elon Musk and Cathie Wood interview giveaway. I did not see that. Sparks Carnival, good to see you. You know what I think we should do? Let's quickly take a quick walk around the Bryant Park Winter Village. Oh, touring different places. I hope you feel better, my friend. The usual suspect is here, says good day, folks. Hope you had a great weekend. Thank you so much. I did. I had a good weekend. Feel well rested. It's going to be a busy week next week. So hopefully you had a good week as well. Now, here's actually the piece of data that I'm most interested in, and I want your take on this, the viewers, because many of you live in other parts of the country besides New York, and you could probably provide a better perspective on it than me. So on Tuesday, we are going to hear from the S&P CoreLogic as they release their Case-Shiller Home Price Index for September. Now, the forecast is for home prices to increase 10% year over year. That's following a 13% increase in August. So we're starting to see deceleration here in home prices. And just for some additional context, if you go all the way back to the Case-Shiller Home Price Index, what they reported in February through May of this year, they reported 20% year-over-year price gains. And now we are decelerating all the way down to 10%. Well, assuming 10%, that is what most economists are expecting. So what do you guys think? Do you guys think that this reading is going to meet economist expectations? Do you think it'll come in hot? Do you think it'll come in below? What do you think? Blue, thank you so much for the 1,000 Korean won donation. Thank you for your support, and I appreciate it very much. Kel Sonic says, hey Tom, a rainy New York City is still very beautiful. I agree with you, Kel, and thank you for being here. Hey, MM says, hey everybody, Walks on Wall Street, glad to see that you're streaming tonight. I watch you every night after work. Well, thank you for watching. I really appreciate it. And hopefully you had a very good day at work today. Lucky Rodriguez says, I really love your lives walking around New York City. I feel like I'm right here. Greetings from Brazil. Good to see all of our Brazilian viewers. Now, I think the most impressive team so far that I've seen in the World Cup is between two teams, and I think that's between Brazil and Spain. Would you guys agree with that? I think Brazil had a fantastic performance, and Spain probably looked the most polished as a team. I don't know. Those were the main two standouts for me. They just looked like the most dominant teams. Very well polished, very few mistakes, right? They also look the most experienced too, like they've been doing this. Now, the United States national team, I think it's the second youngest team in history, right? The second youngest U.S. men's national team. Although they did hold England to a 0-0 draw, which I guess is good for us, right? Soccer isn't really our expertise, for lack of a better word. So here we are, Bryant Park, Winter Village. Yeah, Mike MTL says, I agree. Dusty Cole says, I like Brazil, France, and Spain. Dan Zhang says, yeah, I think it's a win for the United States that we tied England. I do too, because it's not our go-to sport. And when you have such a powerhouse like England, like that's their sport. Big Christmas shipping backlog because of the workers' strike. So I was reading about that a little bit. Do you think that's going to be as widespread as they claim? Fabio says, Tom, how much is the cost of renting spaces at Wework here in New York? Thank you so much. Oh, look at all that water. Geez, the whole rink is melting, man. So here's what I would suggest. Now, there's two ways that you could do this at Wework. Here's what I personally do, and which is what I would recommend. I wouldn't opt to get your own office space because that could run you anywhere from $800 a month all the way to $2,000 a month. What I would do is spend the $299, so it's about $300, and it will give you access to the community spaces or the open spaces at any Wework location, not only in the United States, but also in the world. And furthermore, what I would suggest is write down all of the Wework locations that are open 24/7 and stick to going to those, because if you work, let's say on a Saturday or a Sunday, chances are you can get your own private office anyway because there's going to be nobody in the office. So that's what I do. And it saves a ton of money and it's worth it in my view. I think it's a pretty good deal. $299 and you could access any Wework office in the entire world. Many of them are actually open 24/7. Now we've talked about Wework on a company level. Obviously Adam Neumann is a very, very controversial character on Wall Street, but he is no longer at the helm of Wework. I think that was passed down to Marcelo, and now Marcelo has stepped down from SoftBank. So I'm actually not sure who is in charge of Wework as of now. Wow, Brad's Brain says nephew had a tournament here in KC years ago. Outdoor rink, negative 17 degrees. He said it was the best ice skate ever. Yeah, I'm surprised that they don't have some sort of, well, they probably do, right? They probably have some sort of a cooling system under the ice, but when it gets almost 60 degrees, it's probably not much you could do, right? Hey, Bill Ryan is here. Always a pleasure to see you, Bill Ryan. Walking Minnesota says that Wework series on Apple TV was very, very entertaining. So I didn't see it, Walking Minnesota, but I heard about it. And now allegedly, maybe I don't even need to say allegedly anymore, but Adam Neumann was using company funds to, fly on private jets, buy his kids things, and it was very, very strange. And, Masa's son at SoftBank invested billions of dollars into this idea, and Adam Neumann really, at times drove it into the ground. But I think Wework is a really good idea, and I think it will be fine. I think the company will be fine with new, more mature leadership, I should say. Rich Child 9, yeah, there was a very massive scandal with the Wework founder. Cynthia Sparkle says, but people want to work from home unless it's a fancy place. Plus they hate commuting as it is and it can be costly. Yeah, that's true. I guess it just really depends on your line of work, right? It really, really just depends on what you do for work. So for me, I have to travel a lot for work and meet clients in person. So it's sort of hard for me just to work from my house, right? Wework is convenient for me because if it's near a client office, we could, quickly pop into the Wework, have a meeting. But look, if you're a software engineer or something like that, and you're just sitting at home all day, knock yourself out. I think that's fantastic. But depending on the line of work you're in, you may need an office space. Also, I want you guys' opinion on this because I think we're going to get a mixed opinion, but I want your feedback. At least speaking for myself, I can work from home, right? Meaning my physical home, only for about, and the reason why I say this is because I did this during the pandemic, only for about a month. And then I sort of go crazy. I sort of get maybe what you call environment fatigue. Is anybody familiar with that? Like sitting in the same place, the same desk, the same cubicle every day, forever. I don't know, the way I'm wired, it just drives me crazy. Hey, Naval DC Short says hi. Penelope is here from Tennessee. Good to see you, Penelope. Edward Adams says, got to keep it clear of the leaves from refreezing. That's true. You'll have a whole ice skating rink full of leaves. Google says 100% agree. I hated working from home, especially in a cramped New York City apartment. That was my case too. I don't know. I think humans sometimes crave interaction from other humans, right? Some people like to be alone in private. I guess it makes sense. The tough part is after 1 month and before about 6 months. Oh, after 6 months you adapted. Copy that. Sparks Carnival says, Tom, even during the 2020, 2021, I went into the office every day. I need that routing and interaction with people just cracking jokes. I agree. NMB045 says, Tom, I can relate. It's a big problem for me too. Cyber Sparkle or Cynthia Sparkle says sometimes. Big Talk is here. Welcome. Yeah, Brad's brain is like, no idea. Tom never left the office. Yeah, if you're a small business owner or something like that, chances are you were rucking this out through the entire thing, which I respect a lot. Now in corporate America here, sometimes they actually, like, you were not allowed physically to go to the office. You had to get some sort of like VP approval or something. Daniel says, I feel the same, sir, because our school is currently online courses and I'm very excited to be on a face-to-face classes again. That's a very good point about being in college during that time. Now, I just missed the whole COVID pandemic. I graduated before COVID, thank God. You know, I always think about the people who are paying the big bucks at all these private schools, right? And they had to pay the same amount of money to do all online classes. I don't think that's fair. I don't think you should have had to pay top bucket if your courses are going online. I think you should have had, I think the school should have given you a discount, because generally speaking, at least from my experience, an in-person course is more than online. Now, I took a ton of online courses at John Jay, mainly because they were less expensive. So I don't feel that it's fair to have the students paying for an in-course experience if it's all online. I don't know, maybe it's just me. Tariq Khan says, I worked remote for 5+ years now. I love it. When I need to see people, I check into a neighborhood bar where I see regulars. Between coffee shops and bars, I see enough people. Interesting thought. So it's almost as if you use like coffee shops as a quick office space, like you could duck in there real quick. Again, it probably all depends what you're doing. I don't think that would work for me because I'm on calls so much, and I don't think I could. I think I would probably disturb them. Derek Dulce is here. Good to see you, Derek. Welcome. So after sales, obviously Salesforce is going to report earnings Wednesday. But I'm very interested in the housing data that we are going to get. And again, this all will build up to the FOMC meeting when we will probably be getting another 50 basis point rate hike. Now, really quick, futures are down across the board. And if you look at the E-mini, the S&P 500 E-mini futures contract, throw a 200-day moving average on there, and you'll sort of see where we're running into a little bit of resistance right at the 200-day. And as we talked about last night on the live stream, this bear market rally, so we'll just call it a bear market rally for now, has been really led by the Dow, or the Dow Industrials, the Dow 30. And we were going line item by line item and naming off some of the largest stocks by market cap or by weighting in the Dow, right? So you have United Health, you have a lot of very big established companies as opposed to the, you know, high-flying tech companies. I'll show you guys my old office real quick. And many of which pay dividends of 2% or more. And so since we're in this environment of QE, of quantitative tightening rather, and interest rates that are going up and I think are going to stay elevated for quite some time, the market you're seeing this big rotation in the market out of all the speculative high beta nonsense into solid companies with strong cash flows that pay dividends, like IBM. Now, IBM, I think, is trading at a 52-week high, has almost a 4.5% dividend yield, a Dow 30 stock. So it's no wonder that the Dow is leading this market, leading the S&P, and the S&P is leading the NASDAQ. Really quick, this is the lobby where I used to go into every day. This is my old office here. Now, we used to have this big statue. Oh, it's still in there. You can see it just in the back there, the cause statue that was actually I'm trying to think of the building, on Park Avenue. But the one in our building was black, and the one on Park Avenue is this big pink structure. I'm sure many of you have actually seen it on our walks. But sometimes they move the sculptures around between building and building, but I'm surprised to see that ours is still in that building. Interesting. So if we think about where the S&P has rallied to now, right around that 4,000 round number, on a forward basis, right, if we think about forward PE ratio, the S&P 500 is actually very expensive here. Well, I shouldn't say very, but relatively. And the reason for that is because since we've rallied from the lows to that 4,000 number, we are trading at about 19 times forward earnings for 2023. And another thing we've been talking about that Morgan Stanley actually confirmed yesterday is they see about a 20% earnings decline for next year. So if that actually comes to fruition, and that's the case, well, the S&P is actually not trading at 19 times forward earnings. It actually may be trading at 21 or 22 times next year's forward earnings. So I think that's something we need to watch for here. Now, those two follow-through days that we had are technically still intact. So I think we need to be trend followers here. And no matter what, sort of our instincts and our emotions tell us, I think we need to be following the overall broader trend. Yeah, Sparks Carnival says healthcare will definitely be a growth sector in 2023. I agree. Michael Joseph says QT might end mid-2023. That is true. You know what? Aren't we hearing the beige book this week too, or is that next week? I forget. It's either this week or next week. I think we hear from the Federal Reserve with the beige book. Dan says, Tom, the stock market to GDP ratio shows we are 60% overvalued today in the S&P. Dan, you know what? It's good that you commented that. Blanking on his name. Oh yeah, Ken Fisher. Ken Fisher posted an interesting video on his Twitter page. Obviously, Ken Fisher, excuse me, is the CEO of Fisher Investments. He talks about something similar, but he compares it to that, though the S&P may be overvalued on that sort of basis, the market tends to go through, in these type of environments, right, when we have elevated inflation, they tend to go through two forms of corrections, one of which being a time correction. So he says, even though the S&P is this overvalued, it doesn't necessarily have to go down a significant amount. Now, I'm just playing devil's advocate. I think we may test the lows again, but he's sort of calling for what Stanley Druckenmiller is calling for, right? Sort of like a sideways chop like we saw in the 70s, and waiting for the market, or waiting for GDP growth to catch up to market valuations. Maybe that's something that'll play out. Who knows? It was a good video, though. If you go to Ken Fisher's Twitter page, I think it's the last thing he tweeted. So we are now right outside the News Corporation building, which owns Wall Street Journal, Barron's. I also believe the New York Post. Right in here, Fox News. And this is their very famous Christmas tree here that unfortunately got burned down last year. Hey, the ABX girl is here from the Bronx. It says, hey Tom, the Business Insider has an article about how crypto losses are hitting the nightclub business in Miami, and hospitality in Miami is now concerned about the domino effect when it comes to jobs. Yeah, I think you could say that about anything, right? Now, there's a lot of these, and we've been warning about this for so long on the stream. These are very, market cycles are the same every single time. You have these people that got lucky in the cryptocurrency markets that, when they were making all this money, they were spending it at nightclubs, buying ridiculous Rolex watches. And to ABX Girl's point, not only are we seeing stuff like that where, nightclubs revenues are declining, but also on the secondary market for luxury watches. There's reports that the secondary markets for luxury watches are being absolutely flooded with supply, because people who were making all this money when times were good were out buying Rolexes, all this other stuff. I couldn't even name all these luxury watches. I'm not a watch guy. But supposedly now the secondary market is being flooded with supply of these Rolexes. And I remember I was reading, I think we actually may have covered this on the stream, all the way back when the markets were raging, right? We were reading all of these articles about how there's wait lists to get a Rolex watch, there's wait lists to get all these different luxury good items like watches, but now people are selling them because the markets are declining. It's a good point. Hey, SoCal Lawrence, thank you so much for the $2 donation. You were very kind. Says, thank you for the walk tonight. I am missing New York. Well, SoCal Lawrence, hopefully you had a good time when you were visiting, and hopefully you had a very, very good holiday. Oh, Ken Glass, thank you too for your donation. My friend Ken Glass, $2.99, says for a new mic fundraiser. Thank you, Ken, for your kindness. I appreciate it very, very much. As we head closer to Radio City Music Hall. Now, if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you are new here. We tend to do these live streams about 5 days per week between New York City and Miami, Florida. Wow, this looks really nice tonight. Hey, Bill Rollins is here. Hey, Bill. Good to see you. I know, Mike C says, wow, check out the line for Adele's. I think this may be the longest we've ever seen it here. Although in the summer, it definitely gets longer than this. Felipe Lima is here. Hey, Felipe, good to see you. Eric says, good evening. Love seeing this channel's viewership grow. Thank you, Eric. Thanks for being here. Jordan from Canada is tuning in. Welcome. Tony Oso, welcome. I know, yeah. Dan says wretched excess is a terrible behavior, unfortunately. Dan, if you're watching any specific levels as it relates to the S&P, any specific levels you're watching, and question, do you think that it's possible for the markets to revisit the COVID lows? Do you think that it's possible for the major indices to revisit their COVID lows? Now, the only reason why I ask this is because if we're thinking about it from the M2 money supply and monetary policy, the reason why I say that is because it's pretty obvious now that markets went up, generally speaking, due to two things: increased liquidity and egregious accommodation by the Federal Reserve. So if we pump all that money in, and assuming we just take the exact same amount out and leave markets very illiquid, well, I don't know. Could major indices go back to their COVID lows? Because many individual stocks already have. Many individual stocks have not only gone back to their COVID lows, they've crushed and blown right through them. I think really the only things that are holding up the S&P 500 is a lot of the energy and financial stocks. For obvious reasons, oil and gas has been doing fantastic. So there are some specific sectors in the market that are doing really, really good based upon the macro environment we're in. I don't know, it's just a thought. Abdullah is here. What's up, Abdullah? Thank you for being here. Tariq says revisit COVID lows. Nope, but I don't mind if they do. Yeah, I mean, if markets revisit COVID lows, I mean, what that would mean for individual stocks would just be absolute calamity and mayhem. So I'm not sure. Well, look, the 2 follow-through days we had are still intact, so we'll see. Brendan O'Brien says oil has pulled back, but oil stocks have stayed high. That's a very good observation, Brendan O'Brien. Like, fantastic observation. Because if you go to my Twitter page, if you follow @WalksWallStreet on Twitter, I posted a chart where I overlaid crude oil futures on top of the XLE. And we're seeing a crazy divergence here between crude oil and not only the XLE, but individual oil and gas companies. Now, I'm assuming that divergence is going to close in one of two ways. It's either these oil stocks are going to come down, and they're going to come down hard, or we could get a freak rally in crude, which I don't think will happen. Anybody know where crude oil is trading at right now? What are the futures doing now? All right, so we are outside the beautiful Radio City Music Hall. They have the fantastic Christmas tree all lit up here. Hey, Ryan Beck is here. Good to see you, Ryan. Dan says, I believe the S&P will visit the low 2,000 level. Sam Oliver says, hey Tom, Bitcoin could go down to 11K question mark. Absolutely. Especially if we have a very, very harsh sell-off in the stock market. Usually the cryptocurrency markets lead the stock market. But I mean, look across the board at all the major equity indices. This rally from the bottom of the Dow has been about 18%. The S&P 500 is approaching 15%. If this is a bear market rally, we should, probably roll over fairly soon, right? We probably should roll over fairly soon here. Michael Joseph says recession is already priced into the market, so I'm thinking only a black swan event could have us retest the COVID lows. It's a good point. Now, that brings me to something we were talking about yesterday, which was the yield curve. Now, I want everybody to think back and remember when the yield curve inverted in 2019. Does anybody remember that? We actually had a yield curve inversion in 2019. But the stock market and the economy didn't fall apart because we had the Federal Reserve pivot and come in here with very accommodative monetary policy. So when we sort of do this yield curve analysis, just because the yield curve inverts, it doesn't necessarily mean that the economy and the stock market is going to fall apart overnight. It doesn't necessarily mean that, because over the past 2 decades, I would say over the last decade, the Federal Reserve has been very, very quick to step in here and save the market, right? By lowering interest rates and buying the short end of the curve. But to your point about a black swan, what did tank the markets was the COVID crisis in 2020, right? So we got our yield curve inversion in 2019. Then we got it again at the COVID crisis. But if you look at the yield curve back during the COVID crisis, we inverted for a little bit, and then we actually started to go flat and steepen very, very rapidly. And that is because, again, the Federal Reserve stepped in here, went on a bond buying binge, and we talked about the relationship between bond yields and bond prices. If you're buying the short end of the curve, that's going to drive yields down and steepen that yield curve, or yield curve control. It's a good point. So who knows? Maybe I don't know. What would be the black swan event? I don't know. Wow, check this out. Beautiful, beautiful Rockefeller Center tree here. Not lit up yet, but I think it will be lit up next week. They will have the tree lighting. Hey, Natalie's here. What's up? Natalie, hope you had a good Thanksgiving. Thank you for being here on this windy night. Brendan O'Brien says, Tom, high level of asset values and wealth effect give Fed cover to continue to keep rates high until they break something. Yeah, and many people have said that, no, I'm not sure I agree with this, but I do have to just say it because I saw it. Some people are claiming that the Federal Reserve is, a part of the reason why many of these individual crypto companies are blowing up, right? So not only the FTX thing, but, Celsius and all these other companies are blowing up. So, also hedge funds have been blowing up. Maybe this is a bad example. I wouldn't consider it an actual blow up, but Tiger Global, which is considered one of the most successful hedge funds of all time, I think it's down like 52%. Three Arrows Capital, which was mainly geared towards the cryptocurrency speculative nonsense, has blown up. So maybe the Fed is breaking things in that regard. So you could actually see how they're setting up here for the tree lighting. Oh man, that is brutal. Really windy night out here in New York. All right, let's cross here. So tomorrow is Cyber Monday, right? Which is set to break records. I think we actually had some preliminary data from Adobe that says Cyber Monday sales are going to be up 11% year over year. We'll see. Michael Joseph says, anyone notice if Black Friday shopping is more crowded or lighter than expected this year? So when I was walking around the city on Friday, there were a lot of people, but if I'm being honest, it wasn't as crazy as previous years from what I remember. I would say like pre-pandemic. It was still wild. Like I remember I was walking around Soho a little bit during the day. It was crazy, but it used to be like really, really nuts. Now that could be one of two things. That could be reasons what we've been talking about on the stream, or it could just be people just choosing to buy things online, right? So we are outside Saks Fifth Avenue. This is where they do the very famous light show here. Hopefully we'll catch a little bit of it. But directly ahead is the beautiful One Vanderbilt building that is lit up in all blue. Hey, Clarence Jackson says, heard Walmart had a more prominent Black Friday than Amazon this year. Really? Holy crap. Tony says, didn't online Black Friday sales break records this year? It did. I think Shopify, there was some data coming out of Shopify that said their online sales for Black Friday, well, obviously online sales, was up about 8% year over year. Oh, you know what I wanted to ask you guys about? I wanted your opinion on this. So we were getting that preliminary data out of Adobe, right? Just let me quickly show you the Hercules thing here. So we had some preliminary data coming out of Adobe as it relates to online Black Friday sales. And you know what really caught my eye? This is the thing that caught my eye. There was a 40% increase. That's significant. A 40% increase in sales that used buy now, pay later. Any thoughts on that? I don't want to project my bias on you guys, but I'll just let you guys think about that. I'll give you guys a beautiful view of St. Patrick's Cathedral right here. Oh, and then let's walk over to Saks Fifth Avenue. I'll show you guys the light show. It's actually going on right now. I know, Dan, that's what I said. Unbelievable, right? There was a 40% increase in buy now, pay later, or people using buy now, pay later for purchases. What do you guys think of the light show? You think they did a good job this year? Terrence Jackson, I saw that. That was nice. That was nice. All right, not bad. Sparks Carnivals, this top story from Barron's Quantum Computing will change the world. You know what? I'm seeing a lot of job openings, speaking of IBM, at IBM specifically for business development representatives, account executives, and enterprise in that division. I think that's pretty good area of opportunity there. Now, usually the market is a leading indicator, and IBM, if I'm just being honest, over the past, I would say, decade, has really lost a lot of its luster. And IBM is pretty much, they actually get a lot of their revenue from consulting services, as opposed to selling hardware, software, and the like. But the market is seeing something here. And is rewarding IBM. And I think it may be because they're making big pushes towards quantum computing and as well as their Watson unit. Now, although they did sell off their healthcare unit of IBM Watson, but maybe the market sees something we don't. I think the stock's trading at 52-week highs, has a great dividend yield, about 4.5%, significant. This is the Cartier building here. Now, who was it that said IBM has the most patents in the world? Is that IBM? May have been Sparks Carnival. Maybe it was Dan, I forget. Anyway, whatever. Check out this taxi cab out here outside of the Versace store. Yeah, so Ryan Beck. It's interesting. The FAO Schwartz store actually used to be right outside of where the Apple store is, the flagship at Fifth Avenue. But they've since moved it, and it's actually right at 30 Rock. But I think it is a very, very small store here. Another thing I forgot to mention. So on Tuesday, we're going to hear another piece of economic news, but I think it's going to be interesting to gauge the health of the consumer. That is when the conference board will release their consumer confidence index for November. Now, consensus is for a 99 reading. That would be 3.5 points below the reading we got in October. And again, this is going into the holiday shopping season, and it seems like consumer sentiment is tailing off. Now, we did talk about the University of Michigan Consumer Sentiment Index decelerating once again, but so far it doesn't really show up in the Black Friday numbers, right? Breaking records, but there was a big jump in consumers purchasing goods and services with buy now, pay later services. I think that I'm not going to call Armageddon on that, right? I think it's just something we need to watch, okay? Because here's where I think that I make a fault every now and then. And if you always put too much credence, and again, this is coming from me, if you put way too much credence and focus in on macroeconomic indicators, which is very, very important when you're developing a systematic approach to investing. But if you go down these rabbit holes, right, and you consume and almost, consume yourself in macro, you will always be paralyzed and you will never buy anything. Because there's always going to be something to worry about. There's always going to be a new war. There's always going to be a new nuclear war. There's always going to be a new coronavirus. There's always going to be something that is going to make you hesitant to not buy. So and I always fall down this sort of rabbit hole too. So I think once you develop your economic framework, a general economic framework on a macro level, keep things into perspective, and sort of use history as your guide. I mean, America is still here and it's still standing, okay? And it's still gonna be here and it's still gonna be standing 100 years from now. You know, we've gotten through world wars, okay? We've gotten through pandemics. There's gonna be more pandemics, there's gonna be more world wars, tragedies like 9/11. We've always gotten through it, right? And we've always, you know, gotten out on the other side. So don't be very, very careful to fall down that perma-bear rabbit hole. Always stay optimistic, but always stay realistic. But always sort of, if your market sentiment, and this is St. Thomas Church, by the way, absolutely gorgeous. If your market sentiment is at a 5 out of 10, automatically knock it up to a 6. If your market sentiment is at a 2, automatically knock it up to a 3, because just gauge the market sentiment around the COVID lows. Nobody wanted to buy, right? So always be an optimist, a screaming optimist, but always be a realist. But when the market gives you those signals, you should test the waters, but never get too perma-bear like a Peter Schiff. That's sort of, I would say, is a critique for myself, that I always force myself to be an optimist. Michael Joseph says, unfortunately, I don't know about 100 years. 20 years, US is definitely still here. If I had to bet money, because here's another saying, by the way. Americans, and look, it's very good to be critical of America, right, where we are, but it's a hell of a lot better than the alternative, right? Oh, guys, check this out. The lights are finally on. I'm not sure if you guys could see inside, but take a look at the architecture inside this building. I keep forgetting the name of it. It is a very prestigious club, but it's absolutely gorgeous in here. I'll give you a shot at the outside of the facade of the building. All right, I think I'm actually gonna cross the street and show you guys this, because for some reason the lights have been off every time we've came across. Yeah, even they're checking it out. I'm telling you, it's absolutely gorgeous inside here. Let me just refresh myself on the name. So this is called the University Club, okay? The University Club of New York. I'll give you a quick sneak peek of the inside. It almost reminds me of the inside of the New York Public Library. Take a look at the crown moldings on the ceiling. Isn't that unbelievable? Isn't that a beautiful building inside? Here, I'll try to give you guys a sneak peek on this side. You see all of the mahogany wood tables, chairs. Absolutely gorgeous ceiling. Very, very similar to the New York Public Library, the Stephen Schwarzman building. Really unbelievable, isn't it? And this is on the corner of West 54th Street and 5th. The University Club. Tony, I'm not sure of the exact address, but it's between 55th Street and 54th Street and 5th Avenue. All right, one more shot of the inside. You could actually see the mantle of the fireplace and some gorgeous paintings on top. Hey, Clarence is, Tom, have you ever been to the Yale or Harvard Club? I have not, but I would love to go. I would absolutely love to go. if anybody is a member and wants to invite me, I'm down. Just kidding. Vinny says, Tom, it is $5,000 a year to become a member. That's actually not as much as I would have thought. That's actually not as much as I would have thought. $2,000 a year. Hey, Zozo Bob, good to see you. Welcome, Bob. All right. All right, let's continue to push up here. We are walking up Fifth Avenue. We are now standing outside the St. Regis Hotel and also the beautiful Peninsula Hotel. And we will be coming up on the Trump Tower here in a minute. Now, I told this story last stream, but I think I'll tell it again since we have some new people here. Right on the corner of 56th Street and 5th stands the very famous Trump Tower. Now, I had a meeting. I was fortunate enough to be able to go to a meeting in the business center here, which is somewhere right in here, probably these floors. And one of my clients is in the building, but it's absolutely drop dead gorgeous in there. But I go to the business center, and it's a state-of-the-art place, just redone after the pandemic. And I'm looking at all the TV screens, and they're these like 72-inch Samsung beautiful display screens. And does anybody want to take a guess, for those of you who didn't already hear the story, does anybody want to take a guess at what channel was on every single TV screen in the entire place? Oh, this is the 432 Park Avenue building, which is another very famous building on Billionaires Row here. But there must have been like 10 or 20 TVs, 72-inch massive TVs. Yes, Stephen, you're right. On every TV, you walk in the business center, CNN is on every single TV. Now, how ironic is that? Now, it's either one of two things. I've concluded that Donald Trump's infighting with CNN is all just for show, and that they're all colluding amongst each other to drive ratings, or it was a pretty good troll, and it's kind of funny. Yeah, Dan says, what? Isn't that funny? Now, I will say, I believe the tenants of the tower, right? So let's say if you have a condominium or an apartment or even an office space, because it is a mixed-use building, I think you do get access to the business center for free. It's beautiful. It's fantastic. There's a movie theater, everything. But yeah, they had CNN on every single TV channel. I was so surprised, and I couldn't hold in my laughter. Oh, is that right? John says CNN is on the TVs due to the contracts did not run out yet. Interesting. I didn't know that. Maybe you're right. Didn't know that. So it has to do with the contractual basis, I guess. All right, anyway, I thought it was a little bit ironic, a little funny. We are now here at the Louis Vuitton building. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, starting at 8:30 p.m. Eastern. Moving right along to Wednesday, so we covered the first half of the week, but Wednesday is when we are going to hear from the Bureau of Labor Statistics as they release their job openings and labor turnover survey. Now, the forecast is for 10.5 million job openings in October. That would be about 200,000 jobs less than in September. And obviously, this is going into, man, that wind is brutal. This is going into the week before the FOMC meeting, so the Federal Reserve is going to be watching these metrics very, very closely so they could set their monetary policy. I do have to say, though, I think the highlight of the week is going to come from the PCE. We are going to hear from the Fed's preferred gauge on inflation. Now, the PCE index is forecasted to rise about 5% year over year. That is going to be slightly below the number that it was reported in September at about 5.1%. Now that's going to be on, I think that's going to be on Thursday. So if I had to bet, whoa, look at this. Look at how unique this is. If I had to bet, I think the movement in the market after the PCE numbers are reported is going to be very telling as it relates to if they think the Federal Reserve is going to take a hawkish stance or if they are going to take a dovish stance. I will say this. If the PCE comes in hotter than expected by a substantial margin, I would say, maybe 0.5 percentage point, which is very possible, by the way. I think that a 75 basis point rate hike is in the cards. But as of now, 50 basis points seems to be what is going to happen. Attila says, Tom, do you do any VR video walkarounds? Just wondering. I don't, but that would be awesome. John says it's the only way CNN gets what little ratings they have left. They contract out to big businesses to play it on their lobbies. That's actually, I never thought about that before. Now, I think a lot of younger millennials and Gen Z, which is sort of the category where I sit in, we usually don't watch the mainstream media channels, not for any like conspiracy theory reason. Mainly because we tend to get our news over, our mobile phones, like YouTube and Twitter, things like that. And to think that I'm gonna pay, what is it, like $50 a month for traditional cable, maybe $80 a month, so I can flip through channels and watch Fox News and CNN. I just think it's really, really unrealistic for the Gen Z and younger millennial community to do that, especially now that streaming services are so prevalent, right? It seems like every single large network, including Disney now, at Disney Plus has a streaming service. So there's no way I'm going to pay for cable television just to watch, Fox News or CNN. And maybe some of you feel the same way too. Who knows? Joe C is here. Says, hey, Tom. What's up, Joe C? Always appreciate you being here. Take a look at this guy here. This looks really nice. Holiday bear. Brendan O'Brien says it's actually $150 to $250 now? Really? For what? What do you get? Oh, I guess they bundle it in with all the other nonsense, right? All right, really quick, I just want to point out we are now standing directly across the street from the beautiful, the gorgeous Plaza Hotel and Tower. If you look at this very unique building, this is actually the Steinway building right on Billionaires Row, one of the newest additions to Billionaires Row. And one of our viewers of Walks on Wall Street actually was on the architectural design team designing that building, which is awesome to hear, awesome to see. This one right in between the plaza is Central Park Tower, which I believe is the newest addition to Billionaires Row. Ron Young says, I'm 71 and I don't even watch cable news. Yeah, I think it's just consumers always change their habits, right? And if you do, as an organization, if you do not adapt, you are going to get disrupted. I think a very baseline example of this would be the competition between then Circuit City and Best Buy, right? The reason why Best Buy is still around and actually thriving is because at the time the CEO and the C-suite at Best Buy went very, very aggressively into online marketing campaigns and e-commerce when Circuit City did not. And that is why Circuit City is no longer, and Best Buy is actually doing rather well. This is the flagship Apple store at 5th Avenue. It's actually underground. You can see the workers and everybody. Yeah, Stephen Lewis is like Radio Shack too. And I'm so glad you brought that up, because here's an interesting piece of stock market history here for everybody. Now, one of the biggest stock market winners in history was a stock called the Tandy Corporation, Tandy Corp. I think at its peak, it went up more than 3,000%. And Tandy Corporation went on to be a little company known as Radio Shack. And it just goes to show that just because a stock and a company is a top dog, it doesn't necessarily mean that it'll always have to stay that way. And I wrote a piece in the Behind the Street newsletter sort of talking about the FANG stocks, right? Now, the FANG stocks are all the big tech stocks, a lot of the big enterprise software stocks like Microsoft, Alphabet, Apple. Ironically, we're standing outside. But if you look back at the makeup of the S&P 500, so the top 10 companies in the S&P, right? And keep in mind, the S&P 500 is a market capitalization weighted index. So if you go back even 50 years, the top 10 companies in the S&P look very, very different to how they look now. And if I had to bet, I think in 50 years from now, the top 10 stocks in the S&P are going to look very different than what they are even right now. So just because an Apple is a top dog today doesn't guarantee that they will keep that spot forever. Same thing with Microsoft, same thing with Alphabet, Google. So I think as investors, we need to sort of stay aware of that, very, very aware and cognizant of that. Hey, Tony says, I used the Tandy TRS 80 back in high school. Love that. You know, it's sort of like this. Remember back in the day, I mean, my parents used to tell me these stories about how the main coveted jobs out of college at the time would be, oh, I want to go work at GE. I want to go work at, IBM. If you worked at General Electric, you were thought to be safe for life. You would have a job for life, and you're going to be set with a pension. But look where GE is trading at now, right? GE was one of those surefire stocks back in the day, and now it is teetering on the brink of bankruptcy. Now, I do have to commend the CEO. I actually really do like the CEO of General Electric right now, Larry Culp. I think he is a fantastic CEO and an all-star. But you get the point, right? So nowadays, the coveted jobs out of college and even high school is, I want to work at a big enterprise software company. I want to work at all these big tech companies. Now, maybe in 20 years, it's something completely different. Who knows? Who knows? All right, let's get you guys an up close and personal shot of the Plaza Hotel here. That's true. Yeah, Brendan's like same with Goldman Sachs and Morgan Stanley and investment banking. That's a really, really good point. Now, Wall Street has actually been, I would say, up until about 15 years ago. So 15 years on, big Wall Street investment banks are actually dealing, and even some hedge funds as well, are dealing with increased competition for talent from tech, right? Because some of these target comps at these very lucrative tech companies, let's say if you're a software engineer or a SWE or something like that, or even an enterprise account executive, some of these target comps could be $500,000 plus, right? Again, that's not going to be the majority of them, but there's some, let's say if you were a senior software engineer at Google, right? You've been there a while. Some of these target comps are crazy, and that has been draining a lot of talent from traditional Wall Street. Now, I will say, I think the area of opportunity, right? If I had to do everything all over again, if you're looking straight for very, very high target comp working on Wall Street, I would say that it's probably in the quantitative researcher realm at a major quantitative firm like a Citadel, Jump Trading, 2 Sigma, something like that, D.E. Shaw. I think the quantitatives are probably making the big bucks now. Okay, everybody, team, we are now walking down Central Park South. This is officially one of my favorite areas in New York City. 59th Street, Central Park South, very beautiful, obviously right across the street from Central Park. So you can actually get the N, R, and W trains right here at the 5th Avenue station. And this is Central Park right in front of us. But we are actually going to head down towards Columbus Circle. And the buildings that you can see in the distance, these 2 big buildings here, is Deutsche Bank Towers. Now, Deutsche Bank is the German investment bank. And the building on your right is the Trump International Hotel and Tower. And just to the right of the Trump International Hotel and Tower is one of the most prestigious buildings in all of New York City. And that is 15 Central Park West. Very, very beautiful building. Very expensive too. Hey, Shadowstock, what's up? Good to see you. Shadowstock is a good Twitter friend of mine. Good follow on Twitter, by the way. Shadowstock. Please check him out. We're walking down now, passing the Ritz-Carlton, which is also another 5-star hotel here on Central Park South. And then we will pass 106 Central Park South, which is actually, it's a mix between, well, it's not a mix, Trump Park and Trump Place. And during COVID, I told you guys, I was able to find a ridiculous deal in this building because we had a mini flash crash in the rental market in New York City, where many of the studio apartments, and I think across the board, saw as much as a 30 to 40% haircut in the rental prices. So I was blessed and lucky enough to be able to rent a studio apartment overlooking Central Park here for like $2,000. It was kind of crazy, but obviously that opportunity will never happen again unless we have like another crazy pandemic. Oh, Dan, is that right? You're Homer Simpson on Twitter? Nice. Yeah, sometimes you guys have different Twitter names than the names on here. Hey, the garlic is here. Welcome. Good to see you. If you look all the way down here, you'll see the One World Trade Center. Yeah, Joseph, there's a Pret right here. I've never been here. Never been to the Pret here. But you want to know something even funnier now that we talk about scaffolding? The day I moved in here, all the scaffolding went up around the building. And the day I moved out is literally the day they took all the scaffolding down. Anyway. Stefan says, do you love Hollywood, Florida? So I live very close to Hollywood, Florida. I bought an investment property in between Aventura and, around that area. I won't disclose exactly where. But guys, we're coming up on the 2-hour mark. I think we covered a lot of stuff, right? So for those of you that are just joining us, we'll quickly run down the list of the major events that are happening this week on Wall Street that we should be paying attention to. Now, Monday at 12 p.m. noon, okay? So noon Eastern, if you go to marketwatch.com, you'll be able to listen to the interview from St. Louis Fed President James Bullard, okay? That is going to be happening and taking place at MarketWatch at noon tomorrow. Then a little bit later in the evening, we will be hearing from New York Fed President John Williams as he speaks at the Economic Club of New York. Now, the reason why I wrote this down as the main two things to watch on Monday is because not next week, but the week after is when we will have the next FOMC meeting at the December 13th through 14th meeting. So maybe we could use the verbiage that come out of the mouths of the Fed presidents as a proxy or potential leading indicator as to what may happen in relation to raising interest rates at the next meeting. Really quick, this is the lobby of the very famous J.W. Marriott Essex House. This is another 5-star hotel right at Central Park South. Now, this is not a modern hotel. Very timeless, very classic, older style. Sort of reminds me of the Great Gatsby. But this is an absolutely amazing building. And I would very, very highly recommend this hotel. A little bit pricey, but as I always say, you get what you pay for. When you step out of your hotel room, you are here at Central Park. So essentially, Central Park is your backyard, if you will. So I definitely think it's worth it. Let me try to give you guys a better shot of the front. You can see the major double doors here. But then moving on to Tuesday, obviously a main theme that we talk about a lot on the channel is cybersecurity, specifically not only from an investment standpoint, but I think there's a lot of good career opportunities in cybersecurity specifically. Now, we have a saying on the channel, there's always a bull market. You just need to know where to look. And the problem is there's a raging bull market, unfortunately, in cybercrime. So scumbags, derelicts all over the world are stealing and pillaging not only individuals like you and me, but all the way to the corporate level and then the government level. Oh, look at this. This is the ballroom here at the JW Marriott Essex House. It looks like they're setting up for some sort of event. So the reason why I say that is because CrowdStrike, ticker symbol CRWD, reports on Tuesday. Obviously, 2 weeks ago, we heard from Palo Alto Networks, which I believe is the unequivocal leader in cybersecurity with their cohesive zero trust architecture. But obviously, my top three companies that either I would work for is probably Palo Alto Networks, Zscaler, and CrowdStrike. Yeah, sunshine after rain. It looks nice in there, right? I think they did a pretty good job. Wow, technically fundamental. John's tactical communications here. Used to be a developer now. I'm all into that cybercrime stuff, cybersecurity. So John, what do you think about sort of that statement there? do you think, because here's what I think, right? And I am in software sales, tech sales, and every time I go into a client, right, and specifically I deal with a lot of the large hospital chains, home healthcare agencies, and nursing homes, and every time I'm talking to a CTO, the one thing that is top of mind is strengthening their cybersecurity infrastructure. Not only for the obvious reasons, but there's a lot of HIPAA compliance things that go into healthcare. And unfortunately, a lot of these nefarious actors target critical infrastructure such as hospitals, home healthcare agencies, and nursing homes. So they have a huge target on their back. So they tend to, I'll just say this, just quickly summarize it. I think you're going to see an increase in cybersecurity spending over the next 5 years. Even though we're in an environment where corporations seem to be cutting and canceling a lot of software that they don't need, I think cybersecurity is going to be that standout where they're actually increasing spending. But I would love to know your thoughts from your point of view, from somebody who actually works in the industry. Maybe you could provide us with some more context. Really quick, I wanted to point this out. This is the New York Athletic Club, right here, Central Park South and 7th Avenue. Now, during the summers, if you see these big arches here, there's always big events, parties, and the building just looks really amazing, especially in the summertime. So if you're visiting New York, definitely come over to 59th Street and 7th, and you could see the New York Athletic Club for yourself. Robert Hicks says, Tom, one small breach could cost millions, so a strong cybersecurity posture is a requirement these days. John Martin says, honestly, a lot of the cybersecurity these days are still using MD5 encryption, easily breakable. Not many using SHA, the real military level security. You will hear a lot about it soon. Let me take a screenshot of that, actually. Give me 1 minute. Thank you for that, John. SHA soon. I'm going to do some research into that. John says, Tom, even Elon Musk is pushing SHA into Twitter as we speak. I want to zero trust is important because of inside bad actors, but civilian cybersecurity really possible, or is it more cyber harm reduction? Well, I think when I'm dealing with a big organization, so here's what I had to deal with a lot of, especially when the pandemic hit. A lot of my clients, obviously, right, like everybody, they had to quickly adapt their workers to work off-premise, so remotely, right? So in order to extend, so if we just think about regular cybersecurity, like the basics back in the day, they used to call it castle and moat cybersecurity, where you would just throw up a firewall and you would say, all right, anything on the outside of the firewall is dangerous, anything on the inside is good to go. But that was back in the day when public clouds really weren't that prevalent. So you think about Amazon AWS, Microsoft Azure, and Google's, oh man, that's wind is super. Oh my God. Jeez. All right, we're gonna wait for the wind to pass by. But public clouds, right? So, and we access a lot of our data on SaaS applications too, right? We just talked about Salesforce, right? So chances are, if you work at a big organization, especially if you're a sales guy or sales girl, you have to enter client and proprietary information into some sort of a CRM. So as that corporate infrastructure expands, then they extended that network via VPN. But now, the problem is there could be nefarious actors internally. So what they're trying to do, oh gosh, let's try to go down in the subway here. a little subway shortcut. Little subway shortcut there. All right, I'll quickly point out these buildings. These two are the Deutsche Bank towers, formerly known as the Time Warner Center. And it's crazy now because down on Wall Street, Deutsche Bank was really the last stand of a major investment bank being actually on the street of Wall Street. And now they're even gone, and they're up here. But anyway, I think that's why you're going to see this big push towards zero trust architecture, right? So you could verify based upon your privileges within the organization. So should a developer be accessing, this particular tool, so it'll verify your identity based upon which applications you should or should not be using. And it doesn't matter if you're an employee. Let me cross here. And from my understanding, just based upon the sales volume I've been seeing with my clients, Palo Alto Networks seems to be the top choice. Hey, the Papa Smurf, the OG, our FDNY firefighter is in the house. Thank you for joining. Hopefully you're not working too hard tonight. Wow, the wind is really picking up here on 57th Street. Hey, Ryan Iglesias is here. Good to see you. Okay, 57th Street, Broadway. You can see the Brooklyn Diner on your right, and also right in front of you, you can see 432 Park, beautiful building. Yeah, I know. Michael Joseph is talking about the FTX scandal. I think it was just more the Sam Bankman-Fried was just outright defrauding people, right? John Martin says, Tom, details on the security that is being referred to in the news also involves some controversial issues, because to fully secure a system, you need to gather info from the visitor without its permission. John, there was a great article about this exact thing you're talking about in Investors Business Daily about 2 weeks ago. I'm going to try to post it to the community page because it was saying exactly that. And many cyber experts, I think they actually interviewed a head cyber analyst at Palo Alto, and he said the same exact thing. He said there's going to be privacy issues and concerns, and essentially these companies will need to overstep their bounds in order to provide the safety that they need to provide. But that's going to cause a big uproar. Interesting. Hey, out and about. Good to see you. Michael Joseph says, I get spam every day from banks. You know what I've been getting a lot? And this is almost like relentless nowadays. And let me know if you guys get it too. It's not the spam phone calls. It's not. It's the spam text messages. It's relentless. And what they try to do is, I think it's like a form of an Emotet scam, where they send me links that, oh, your Verizon password has been updated. If this wasn't you, click here. And it makes it look like it was from Verizon or AT&T. Or it'll be, a scam text message impersonating CVS to pick up your prescription. It says, click here. But if you click there, it's probably going to download some sort of malware on my phone. But the spam text messages have been absolutely relentless. Like it's almost to the point it wakes me up, because it just, the notifications. I gotta put you guys down on the floor for 1 second. Give me 1 minute. Hey, Out and About is here. Good to see you. All right, team. I'm actually going to walk back this way, if you don't mind, because we're coming up on the 2-hour mark. And before I go home, I want to grab a cup of coffee, if you don't mind, because the Dunkin' Donuts near Penn Station closes right around now, but the Dunkin' Donuts here is open 24/7. So I'm just gonna grab a cup of coffee real quick. Out and About, good to see you. You know, Out and About is our moderator from Toronto. And I could only imagine how cold it is in Toronto. It's almost 60 degrees tonight in New York. It's awesome. Weather is fantastic. I know, NMB045 says coffee at 11 o'clock, how do you sleep? I gotta get some stuff done. I gotta do a presentation tomorrow at 2 o'clock. I gotta polish up the deck. Maybe I'll get decaf, I don't know. All right, the last thing I wanna show you guys, because we covered a lot of good conversations, and I appreciate everybody joining the conversations tonight. I learned a lot, especially about cybersecurity. But check out how gorgeous the Central Park Tower is. And just from some perspective of just how tall it is, this thing is a monster. Yeah, Sam Morgana says donkeys at this hour. I gotta get a little bit of energy in my system for the train ride home. Q50 so are you streaming on the iPhone 14? We are not. This is the iPhone 13 mini. Now, the last thing I'll say is, speaking of the iPhone, right? The first thing we talked about tonight on the stream is I would watch very, very closely a lot of these protests that are going on in China, right? As it relates to the zero COVID policies. Now, I think Dan Zhang said that the Hang Seng index is down big time right now, and I think it could be maybe perhaps due to these protests and riots, and I think that may affect Apple. Now, on Apple's last earnings report, there was two main takeaways, at least for me. Number one was there was about a 600 basis point hit to revenues solely due to currency fluctuations and a strong US dollar. But number two, they're giving warnings as it relates to inventory levels in iPhone 14s and the Pro Max. And I think we have our answer as to why, right? Zero COVID policy, Foxconn factory is in mayhem, widespread protests. So I think we need to keep our eye on that situation. Now, if you go to Twitter, there's some unbelievable footage of it. And I'm even so surprised that we actually are getting footage of it. But the footage is pretty incredible. So check that out. You know what we'll do, guys? guys, because I'm gonna run in here, get a coffee. But before I do that, I want to say thank you to all of the viewers. We reached 25,000 people on the channel, which is just insane. So I really appreciate you guys watching the live streams and participating and giving me your feedback, because I'm learning a lot as well. I think it's good to have an open discussion on the financial markets and tech in general. So I want to just thank you guys for always showing up and being really, really engaging and pleasant to talk to. But I will see you guys tomorrow, all right? Have a great Monday. Have a good start to the week. If you want to stay up to date with us, if you scan the QR code on the right-hand side of the screen and punch in your email, we do write a free investing newsletter for the chat where we talk about the US equity markets, emerging markets, fixed income, and the like. Feel free to subscribe there for free, and we'll see you tomorrow at 8:30. So Technically Fundamental, thank you so much for joining. Joan K, Stephen Bate, KC, Cynthia Beal, Tony Oso, thank you so much. Mohammed Sunshine After Rain, Natalie, NMB045, thank you so much. And have a good start to the week. Dr. Longest, Stephen Lewis, out and about. Chinook, thank you so much. Matt M, FredX, Sparks Carnival, Q50, John Martin, thank you so much. Thank you for your insight on cybersecurity, by the way, tonight. I found that very insightful and I enjoyed it. Dominic, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere and you just need to know where to look. Wishing you all a very successful and prosperous week ahead. Never quit, stay optimistic, and we'll regroup right here at 8:30. Thanks.